Hello, everybody. Welcome to my take 3 of exercise 16.5. This is Bennett Tchaikovsky, and I'll be your tour guide here today. This is from the Intermediate Accounting 17th edition textbook. Authors are Don Keyso, Jerry Weingen, and Terry Warfield. The question used in this presentation are copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this videos are mine and not Bennett Tchaikovsky, not the authors of the textbook or Wiley. Okay. So now that I've had a moment to dwell, the first thing I want to talk about really quickly is the concept of a reversing entry. And when we look at exercise 16.5, if we have a 12/31 balance sheet date and we're making payments on April 30th and then on October 31st, what ends up happening is that we have to accrue for interest in this time period. So what we're going to do is we're just going to, and typically what you would do is you would say, look, how do I do a reversing entry? Well, I would debit interest expense, credit interest payable on 12/31, and you would obviously have a discount on bonds payable. And then what you would do on 1/1/21 or 1/1/21 is you would essentially reverse the entry to essentially start. So when you pay the cash for interest, it essentially, you don't have to then worry about the interest payable. So if you want to look up more about reversing entries, I think I have probably some bookkeeping videos. So if you ever want to see that, just feel free to let me know. Okay, so let's do the interest portion first. Now, what's interesting about this is that my balance sheet date is as of December 31st, 2020. Okay, so the bond matures on April 30th, 2026. So if I go here, okay, wow, that worked out. Okay, so this is going to be 12 months, or basically we can just 12 months, 12 months, 12 months, 12 months, 12 months, 4 months. So I have a total remaining over here of 64 months left on the bond. Why this becomes important is because I'm paying interest. So my interest expense is going to be how much? Well, my bond, how much cash is being paid? Well, on April 30th, 2021, my face value of the bonds is 500,000. My interest rate is at 10%. So my annual interest is going to be $50,000. Okay, so these are callable convertible bonds, meaning that the company can essentially tell the holders that they've got to convert or they'll get paid out. So right over here, so essentially you've got the annual interest, but because this is semi-annual, this is going to be 50,000 times 0.5. Now, what they told us, so we know that we're going to be paying out 25 grand. Okay. Now, for the discount on bonds payable on 12/31/20, the discount on bonds payable is 10,240. So as of that date, I have another 64 months because I'm amortizing the premium or the discount on a straight line basis. So my monthly amortization is going to be 160. So the way I'm going to go ahead and do this particular one is I'm going to say, okay, discount on bonds payable. This is going to be my discount on bonds payable is going to be 160 times 4, or January 1st, 2021 through 4/30/21. So this is going to be at 640. So my interest expense would be 25,640. Now notice something here. I could have also shown this as being, well, is that the true amount? If I didn't do if I accrued it at December 31st, right, I would have had an interest payable of 25,000 times 2.26, and then this is going to be the difference between this will be, oh, let's see here. So this would then be so this is another way I could have gone and done it too, but they told us that we used reversing entries. So again, it's one of those things that, so again, it's one of those things that if we didn't use a reversing entry, we would have had to clear out the interest payable. And then you're seeing over here the interest expense. Now, again, this is something you just want to be really careful that you're, if they are using a reversing entry, just make sure that this is without reversing entries. But if it was with a reversing entry, meaning that we reversed out the 12/31 accrual, you would just have interest expense, crediting cash, crediting the discount. Okay, so that's the interest portion of this. Now let's get to the conversion. So when we were converting this bond, remember, whenever you're doing a redemption or a conversion, we always want to go and record this. We always want to make sure that we have this up to date in terms of our discount or our premium. So our discount on bonds payable was 10,240. We amortized on 4/30 when we paid that interest. We amortized 640. So when the bond was being converted right over here, my unamortized premium was 9,600. So what I'm going to do is when these bonds convert, I've got to take the bonds off of the books. So this is going to be 4/30/21, bonds payable for 500. I'm going to credit discount on bonds payable for 9,600. Now, the rest of this is going to be common stock at par and additional paid-in capital common stock. So this is what I now need to figure out how this is going to convert. So I've got 500,000, and these are $1,000 bonds. So this is going to be, I have a total of 500 bonds. So if I have 500 bonds, my conversion rate, each one is converted into 6 shares of, so the total amount of shares I'm issuing is going to be 3,000 shares. So at 3,000 shares, and my par value of my common stock is going to be at $25 per, God, I just hate that. I'm sorry. This debt, I just don't ever use it. If you use anything that's above 0.0006, I'll go crazy. Okay, plus 3,000 times 25. And then the rest of the amount is going to go to additional paid-in capital common stock. So it's whatever I need to do to balance. So this will give me 415, 400. So again, this is something that like the par value just drives me bananas. The authors have been kind enough to say that they're going to consider changing it for the 19th edition. I hope to God they do, or else I'll just be going crazy for the rest of my life. So right over here, well, crazy in an accounting sense, which I guess I'm not sure if that's good or bad. But that's how we go through and do this exercise 16-5. And this was on take 3. It's exciting. These things do take me a while. So again, I want to thank you for joining me here today. And I look forward to seeing you on the next video. Please don't forget to like and subscribe. And again, a big shout out to Wiley for allowing me to use their questions. Thank you so much.